Quickly adding here that, of course, we're very, very thankful to all the partners, all the sponsors, everyone else of the team who is making the event epic, wonderful, and fantastic, as well as you yourselves as attendees, right? So that leads me to slightly start introducing the next panel discussion. You already see it up here. We're going to speak about risks, about Rails and rules, and really how to build really resilient Web3 spaces, ecosystems, systems globally. Now, what I would love to do first is give a very quick introduction. You already have seen one of the moderators who I'll be introducing shortly here yesterday. She did a wonderful job, I've been told. So I would love to announce, first of all, someone called Verstraete. He is the founder of Otonomous, which is a very, very interesting. Please be very, very welcome here, Han. Put your hands together. It's a very, very interesting person, actually. You know, what I read about you is that you have stated that crypto lets us imagine and experience with a different, more decentralized, and ultimately fairer future.
There you have it.
That's beautiful.
Where do you want me to sit?
Please sit down over here on my left.
All
It
right.
would be great if everyone can sit right there where the picture is located. Now, alongside Han, we have someone called William Harvey. He is the VP Institutions of Bullish and CoinDesk Data. Please be very, very welcome on stage. Please put your hands together as well. I can't clap, so it will be, that's great. Please take a seat. All right, then, of course, also are you sitting in the right seat? Let me have a look. If you could sit over here, William, I'm sorry about that. Yes, I messed up in my quick notes. Then alongside those two gentlemen, I would love to introduce as well Ray Melbardis, the board member of Nexus Mutual. Please be very well welcome on stage. Put your hands together, yeah, wonderful. He actually already co-wrote the white paper of said Nexus Mutual in 2018. I'm sure you've done also lots of other things in the space. We're going to hear about that. Now, making some space here, last but not least, we have two other people. First of all, Marcus Viriato, the CEO of Parfin and the developer of Rayls. Please be very welcome. And last but not least, please take a seat. Of course, Jillian, we have already seen you. You're going to introduce everyone properly, I'm sure.
No, you've done a great job.
Yeah, but let me also state that you have a super long track record. For who wasn't here yesterday, Jillian is a journalist. She has wrote so many books. She has done so many things for people as well beyond the Web3 space. Very, very interesting lady, most surely. Lovely to learn from you, and take it away for this panel. Thank you.
That is a wonderful introduction. Wow. Can we do it again, actually? Can we just repeat that the whole day, because it's lovely. Oh, no, this is super. I appreciate that, because we have 35 minutes, which goes very, very quickly. And thank you, Alex, for that amazing introduction for everybody, because I was told in the strict rules I wasn't allowed to let the panel introduce themselves. But again, it's Will Harvey, who's here, Ray Melbardis, Marcus Viriato, and Han, we're staying with Han, who's with Otonomous and Otoco. Will's with Bullish, Ray's with Nexus Mutual, and Marcus with Parfin. Bullish is a crypto exchange, as you may know. It also owns CoinDesk. Nexus Mutual is a decentralized insurance alternative in the crypto space. Parfin is a modular infrastructural platform focused on institutional digital asset custody, tokenization, trading, and asset management. So we have a lot of experts here. We're going to talk about the 3 R's of crypto. So it's risk, rails, and rules, and perhaps rewards at the end. We only have 10 minutes for each section, so we're going to hurtle along. But the first one I want to talk about is risk, understanding fragility and trust. So Web3 promises transparency, but exposure comes with it. So where do the panel see, and maybe I'll start with you, Marcus, to my left here. What are the biggest, maybe and under-acknowledged risks in today's online asset infrastructure?
Yeah, I think there are several risks on this space. Obviously, custody is one of them. Holding assets without controlling your private keys could be a big risk. We've seen so many hacks happen over the last few years. Before there was a huge regulatory risk, I would say, which is kind of been fading away with the regulation in the US, MiCA in Europe. So I think the whole crypto environment is improving a lot, and probably in the next few years, the risks will be mitigated, let's call it.
Okay. Will, would you have a comment on, you're running a crypto exchange.
Yes.
It's a pretty scary space.
Yes. Yeah, we run an institutionally focused crypto exchange, so we have a number of risks that we need to consider. Counterparty risk is the first thing that institutions ask when they look to onboard on an exchange. So are you regulated in the appropriate jurisdictions? Do you have an audit and public financials that people can look under the hood as an exchange? And then some of the risks that you mentioned, so custody risk, are we keeping your assets safe? Compliance risks, are we onboarding proper institutions and clients to the exchange that you will interact with? And then also there is the trading risk. So is there liquidity and trading on the exchange where you can properly get in and out of positions?
And you're addressing all those, you're not just itemizing them.
Yeah.
Okay. Ray, you are involved with insurance, so you're looking at risk. How does your project approach it?
Yeah, so we look at a lot of protocol risk. So, we see hacks in protocols almost every week that aren't coded properly on chain. I think the thing that scares me the most at the moment, though, is the sophistication of the phishing attacks, so the custody of private keys part. That's very, there are actors who are getting really, really sophisticated and targeting people in ways that we haven't seen before, so I think that's probably
So how do you provide the insurance? I mean, like a hacker only has to be right once, the defender has to be right all the time, so how does insurance cover that?
Well, I guess we provide cover on battle-tested protocols, things like Harvey and Uniswap, and those things have been around with a huge amount of money sat in them for a really long time, and so we see that as an insurable risk. Okay,
and what about how can you be sure if you're providing insurance, like the underwriting of it? Sorry to pick on you, but just say, like if you're going to insure something, like my car is insured, I want to know that I can get the money.
Yeah.
Do you worry that sometimes you might be insuring stuff that you have no clue about what the risk is?
Well, we like to think that we do deep dives on them before we do any underwriting, but yeah.
I'm not picking on you, but just a thing, okay.
Yeah, it's, I think we have built a really great team who are very good at looking at those things, and we say no to a whole bunch of stuff as well.
Okay, and I think the interesting thing is that there have been so many high-profile, I'm not talking to you anymore, Ray, okay, maybe Han or maybe Marcus, or Will, there's a lot of high-profile hacks. I mean, we know about FTX, even on the 10th, all that draining that happened, there was Binance involved, Wales involved, whatever. Even AWS, tariffs, there's a whole bunch of things that can affect the risk. How can your projects mitigate against that? Marcus, could you?
Yeah.
I mean, it's a big scope. I mean,
no, it's a big scope. Yeah, we're building Rails, which is the blockchain for banks, and most of the risks that we're trying to mitigate is smart contract risk and the chain itself risks. So for that, we've been using security auditing companies to reveal the code. It's very expensive, but needs to be done. Every single upgrade, every single new release, you need to make sure that there are no breaches in the code. And that's one of the most sensible pieces. I think, you're ensuring that's exactly risk, right? And this for us is a must. Then other areas where we mitigate risks, we're embedding some primitives into the chain, which will make compliance transactions, so on-chain KYC, on-chain suitability, on-chain identity verification, things that can mitigate risks of, for instance, dust attacks or asset manipulation. So which is good for the environment. Obviously, it's completely segregated from the Web3 environment, which is everything is free for all. But I think we're in the middle, bringing DeFi to TradFi and helping institutions to adopt blockchain. Okay,
and Han, you're the founder and CEO of Otonomous, which helps builders and investors in crypto and tech form and maintain legal entities in all major jurisdictions. What are the major things that you're coming across in terms of risk?
So I like to think about the major risk being our loss of freedom. So I've been sort of building and investing in crypto from the very early days, and if I now look back, for instance, what's being done on Ethereum and the whole institutionalization, I'm not saying I don't welcome it, but I see a big risk in the institutionalization of the whole space and the custodianship of wallets and our loss of financial sovereignty. So I like to put the risk debate first and foremost in sort of a more metaphysical terms. What are we actually doing by handing over keys and our assets again to centralized service? Let's go back to making sure that on blockchain we can regain our financial freedoms. For instance, there are market mechanisms like what Ray's doing where you can insure your assets. It doesn't have to be custodied by a centralized institution. And we'll talk about regs later on, where you see the regs, favoring the big players and the big boys again.
That's a really interesting point. So you don't have to
I'm
hand over it to a central custodized platform.
Yeah.
You can insure against it.
Yeah, look, nobody likes to get hacked, but if it's the price we need to pay, it's like SpaceX failing and a couple of rockets exploding. You've got to learn from, some hacks, but you preserve your freedom of self-custody. And so the risk of loss of financial freedom is the thing I worry most about, actually.
So you're talking about the human, I suppose, in that regard too as well.
They let us be free, but within a sort of a very
Yes.
defined set of parameters. I'd
Yes.
rather be free to be left alone and build whatever I feel like building.
I mean, I think also oftentimes people look at, cybersecurity companies that look at people being the risk, because a person is there on reception, on desk, clicking things, whatever. Now, we know that people are our greatest asset. How do we help the human not make those mistakes? Do you have any, Ray, you're nodding.
I mean, a comment on your point on phishing. So our security team and our CISO drill this into us as one of the most important risks of running an exchange. And it's the human element that is often the most scary part of these risks to our team and our cybersecurity team. It's people, we've had people acting as recruiters online, looking to phish people who work for Bullish. Also just emails, Slacks, Telegrams, there's so many different channels. So they are drilling this into us, also phishing us like on a daily basis to challenge us. And we actually have a call on phishing with our CISO today. So it's constant and bullish.
It's, I would recommend if people here haven't heard of the Security Alliance, they've set up a bunch of resources online for people to look at, and they also do a 911 response service in case something does go wrong with you. But yeah, you're absolutely right. Well, it's it's all about a culture of security within your team.
And
that really matters.
For people who are native to crypto, it's kind of second nature, but maybe people coming in a bit later or coming secondly, the concept that you could click the wrong link and bang. And I know I'm talking at a retail level, not institutional, but it is quite scary, and that education has to happen too as well. There is responsibility with freedom, I guess.
Yeah, specifically on Otonomous, where we help people setting up entities around the world, we place a lot of emphasis on governance and making sure that there's governance systems in place where the team is not having that sort of single attack vector in the human being. But it's not always easy because despite chanting sort of the decentralization ethos, a lot of teams actually like to be pretty centralized in their governance. Right?
That's true.
Yeah.
And I mean, and I think, and again, I'm talking more retail than institutional, but everybody who's in the space, I mean, may I ask around the room, has anybody been scammed or lost crypto through clicking wrong links?
Oof.
Yeah. I think it's a universal experience, and you're really in when it's happened to you. Very painful, but it does happen. So in terms of with institutionalized, Will, would your approach be different, or do you still need that human element?
You still do. I mean, it's mainly the attack vectors on us as employees, but then, I mean, from an exchange perspective, yeah, we put a lot of money and investment in like security, custody partnerships, also just different infrastructure providers that kind of help protect us against nefarious actors. But again, it kind of comes to the point of, a culture of like risk of like cybersecurity within the organization that is often the most important thing.
And Han, when you're helping entities set up in multiple jurisdictions across the world, like what are your top 3 tips? How do you, I mean, you underline legal, but there's obviously...
So probably the first thing that you want to think about is that you separate out your operational company where the day-to-day and the code repositories and so on are being contributed to from your decentralized setup where the community has governance rights. So you would set up a UK company for your developers. You may have even employees there. Some people like to work as employees for whatever personal reasons, not just contractors. We do that here in the UK. We do a lot of C Corps, obviously, United States, or LLCs. And then you have the separate sort of community-owned entities like Yes Foundations, very often still in Cayman, with a separate token issuance vehicle. For instance, BVI is still widely used, where you then push your token from, but you make sure that your BVI is owned by that decentralized foundation. And the foundation isn't actually wrapping the DAO. The foundation is sort of controlled by a DAO, which is exactly the way it should be. And so you separate that out, you already separate a lot of the risk, because most projects will have a token, and so the risk comes often from the token. Okay. And then within sort of the decentralized setup, you make sure you get the governance mechanisms in place to remove sort of the single attack vectors.
And sort of moving more to tech then, what tech do you rely on, Marcus? What tech do you rely on to keep your platform safe?
Yeah, well, as most of the people mentioned, we have done the setup that Han just described, the foundation, the token issuer, segregate from the developer, and that required a lot of legal and governance, etc., and also mechanisms to avoid single point of failure. So, for instance, the developer side, which is us, we don't control the Rails Foundation's tokens. There's fully segregation of duties, independent directors, and this makes the at least from the foundation, treasury management, etc., completely segregated. So we don't touch it. When it comes to the techie part of it, same thing. Systems are segregated. Some of our employees are really annoyed because we require 2FA for emails and refreshes every 24 hours.
That's so annoying, isn't
oh
it?
my God. It pops up, you have to
Yeah.
do the 2FA all the time, but this is a way to secure, this is for Slack, for everything, all the communication channels.
How many hours you refresh? Every 24 hours?
24 hours, yeah.
Oh my goodness.
It's very annoying. But it is what it is, it needs to be done. In terms of phishing, we receive, the social engineering is getting more and more sophisticated. So we're presenting yesterday at the Bank of England, and I received an email saying, oh, congratulations, you're at Bank of England. Here's a link for you to follow your pictures. Come on. I published in LinkedIn, we're there. This email came like with the social engineering. They were following us on the social media, and they are trying to, create an event for you to click on it. So this is super sophisticated, so we need to really be careful.
Because like with AI and deep fakes, it's a whole new ballgame. It's quite scary.
Yeah. My favorite one was someone went through 3 rounds of interviews and got the job, and then the PDF for the contract was the payload to hack their system.
Oh, goodness. Oh my God. But it is scary because I was using Grok recently with just some friends, and you put in a photograph, and I had 2 friends at an event, and I said, kissing couple. They did, and they're not married, so I had to delete it very quickly. But it's just, I can do that in 2 seconds on my phone. What can people who it's like they say, people who send, all the, I'm joking, Nigerian prince emails, they only need to get 1 right, and they've made their salary, And Will, I know you're more institutional, but what are your guardrails?
Yeah, so putting the institutional hat on, the things that they look at are, when they look at Bullish, it's, are you regulated in a proper jurisdiction? For us, yes. We are regulated in Germany, the US, and Hong Kong. So that sets us to a certain standard of operating as a business from a trading, custody, compliance, and onboarding. Are your financials public? Can you look under the hood? And we're audited by Deloitte from that perspective. And then can we trade and deposit on your exchange knowing that assets are safe? So we use BitGo, who's a regulated custodian, as our main custody provider. So they have some comfort in that on trading on exchange. And then it's about the flexibility and support of assets that they can move in and out. So I think one thing to note is the October the 10th liquidations, where there was 20 billion in liquidations, which is 20x what happened with FTX. As an exchange, from a risk perspective, you need to do some core things. Keeping your exchange up and running, no downtime. Can you send messages? Can you cancel messages? That is a key part of what institutions need. And then can you transfer your assets in and out of a venue? And having, supporting different chains, having no custody downtime, those are some of the things that are institutions
wake at night.
Really care about. Yeah.
Okay. Han, you said privacy is a big issue you want to talk to here. Privacy and compliance, often seen as opposite ends, but how do they work together?
Yeah, I think privacy should be the default setting. Now, it hasn't been the default setting on blockchains, but we know why. It's the evolution of technology, but I think ZK is the most promising, ever more so, especially now that AI bots are going to start operating on our wallets, and will at some point. And if you now think about AI, the way it's developing, it's a horror show. It's sucking in all your data and bundling it and analyzing it to death and chopping it in any possible form. Let's have AI operate on ZK Sync wallets and blockchains. So for me, the next evolution is going to be more emphasis on privacy on blockchain, no doubt. Incidentally, it will probably help on some institutional adoption as well. I mean, do banks necessarily want to see what you transact on blockchain? No. Let's move away from their private chains, let's put it on public chain, but let's do a ZK wrapper around it.
I mean, I think confidential computing is definitely making a bit of a headway now. People realize that selective disclosure, whether it's TEE, ZK, MPC, FEHE, the whole curriculum, but it is obviously more important. Could I ask, Ray, in terms of like the privacy and the tech, because it's all getting very granular now, AI agents are going to have wallets, they're going to do stuff. You know, how are you going to mitigate that risk?
Yeah, I mean, AI is a really interesting one. I mean, I'm still not hugely convinced that it can do that much in terms of trading in and out of the platforms at the moment. So I think in terms of you just have to build the Rails in a way that they can interact with the chain safely.
And cross our fingers.
Cross our fingers,
There was an element of that because, I mean, when did ChatGPT get burst upon the world? Was it 2 years ago? And it's utterly changed the world. I mean, like more so, I think, even than like a smartphone, because that was more, it took time. So I think AI has, I mean, it's a huge benefit. You look at medicine where AI can diagnose and do stuff faster without fail, without mistake. So there's huge benefits. We know that. But again, I'm looking at the AI agents that are malicious, and they're going to be hammering away, and they're not going to stop, and they're not going to get tired.
If I can just add to that, Jillian, very quickly, I do think that the interplay of blockchain as a technology enabler and AI is actually very promising, as long as we keep blockchains or the transactions private, so AI can still analyze that something has happened without necessarily knowing the contents of it. But if you think about AI can actually only effectively operate in the real world if it can operate on wallets. But everything is moving on chain, you know. Ownership of stuff is going to move on chain, so you will basically have that interplay. It's a bit what Chris Dixon, I think, predicted, and I think he's very right on that one from A16Z.
So the hope is not lost. You think there's...
Say again?
Hope is not lost.
Yeah.
You think it's going to be good. Okay, that's good.
Definitely not.
So then moving on to rules. This is the other big sort of bugbear of early crypto adoption. And now we look at, we had a member of the House of Lords speaking yesterday, and he raised a question in the House of Lords. They used the term stablecoins. It had never been raised before. You know, it was the first time, and the minister had to go and, you know, do some research because the question was presented in advance. So rules, it's not just, there's regulators, there's compliance, there's parliamentarians, there's a whole mix-up there. So how can we help or make sure the rules actually work in our favor? We're not going to put square pegs into round holes. Who'd like to jump with that one?
Yeah,
Marcus. He's going to, oh, sorry.
Yeah, I think this stuff is really a regulator's dream because of in theory, they should love it, right? Because you've got, everything is on-chain. You can check the ledger, see the transactions, and you know we've got a real-time reporting dashboard, and insurance companies that are out there in TradFi really can't do the same thing. You can see all of the capital, all of the products, every single cover we've underwritten in real time because it's on-chain. So regulators should, in theory, be embracing the technology.
But are they trying to apply old rules to new worlds? Do you think there's that feeling that they don't, like even I think with the FCA when they did a thing here recently, they put a report and they lumped Bitcoin in with all cryptocurrencies, which is not, it's very difficult to put Bitcoin and we're talking every little meme coin and pump and dump thing as well, all treated the same. So there needs to be an education. And I think with the FCA, you're not allowed to become a member with any cryptocurrencies. You have to divest it. And chances are you don't have any in the first place. So what are your feelings, Marcus, about regulators and parliamentarians?
We've always been dealing with regulators, and especially we've been developing this Rails Enigma, which is a privacy-preserving protocol, We truly believe that privacy would be a must, especially for a mass adoption. You don't want to everyone to see if we believe that every single asset will be on chain in the near future, stocks, bonds, your real estate, your property, everything. You don't want to expose this to the public, right? You want to keep your balances closed. So privacy will be a must. So we've been developing this for the last 2 years and working with central banks. The work we've done with the Bank of England recently, Central Bank of Brazil, JP Morgan, was all around embedding privacy on transactions. The problem with privacy is because people use it for good and for bad. So when it comes for bad, an auditor needs to verify the transactions. So when it comes to the regulatory framework, there's not clarity still how privacy will be kept, maintained, and what are the rules that will need to be established for someone to audit a transaction. Let's say I'm shielding a transaction between two parties, and it's a sanctioned transaction or is something wrong. So who could potentially ask? Is it the protocol? Is it the entity that allowed that transaction to happen that will need to provide the auditor role? So we implemented the auditor role within our preserving protocol, privacy preserving protocol. Therefore, still not clear who should we provide the view key to access that data and to access that transaction. So that's a kind of still a blur. It's not clear, and I think this, doesn't help the ecosystem because even Vitalik announced a privacy roadmap for Ethereum, which is very aligned to what we're doing. And again, if there's no clear rules, there will be problems in the future.
Yeah, I mean, regulatory clarity definitely gives institutions confidence to build towards that. I think we've seen it in Europe with the MiCA license and the MiCA regulation. The European banks are much further along the curve with offering spot crypto trading for their retail clients and institutions than other regions. That is what we find. The Genius Act around US stablecoin adoption, again, has helped fast-track use cases of stablecoins in that region. Bullish, we put our IPO proceeds into stablecoins, into, I think, about 6 or 7 stablecoin providers to earn a yield on that asset, which is super exciting. We actually made as well the CoinDesk acquisition with stablecoins on a weekend. So having, again, the confidence and clarity around that means that we can use it in greater depth.
I think Katie Harris yesterday was speaking from Coinbase at the AGGP, the All-Party Parliamentary Party. She was saying that there's talk in the UK, for example, about restricting the amount of stablecoins at individual consent. Also, the stablecoins providers must put like $1 million in cash, non-earning.
Yeah, exactly.
So, I mean, I think this is where the problem is. We have policymakers wanting to protect people, but these things, I mean, you would never ask anybody to put $1 million on deposit, but no deposit, no interest.
I just don't understand what's going on, to be honest. So I lived in this country for about 20 years now. I'm in the US, and it used to be where you have that sort of principle-based regs. And yesterday I was with my legal team here in the UK, and I said, look, if I am a circle, say I'm a circle coming from the US and I want to do a stable coin in the UK, and they basically said you can't. They want NatWest to be the issuer of stablecoin. And so you guys came out of the EU, whether that's a good thing or a bad thing, we don't probably have to debate this here, but it was an opportunity to then do better. Like MiCA is already a horror show. As a startup, you've got to pay at least 50,000 euros, if not more, to get your license. And it's a tapestry of countries still. And then you guys even add on to MiCA, where you're going to need that $1 million to do a stablecoin issuance in the UK. It's absurdistan.
Well, I think you're right, because yesterday on the stage here, conversation went to how can London and the UK take advantage of the fact that they're not in the EU and they're not, with Genius Act, and they haven't got first mover advantage, but they could have second or third. So, I mean, as it regards this country, it could be very important.
Yeah, I just wanted to talk to that point. I'm really worried about regulatory capture.
Totally.
That basically the big incumbents can work with the the traditional playbook of working with the lobbyists.
And is NatWest going to issue a stablecoin? I don't think so.
Yeah.
So don't wait for it. Oh, they're totally in the pocket of ever more so. That's my analysis. It may be sort of a public choice analysis, but
I mean, there was a request yesterday to sign up to the Stand With Crypto petition. I think they've got like 10,000. They get 100,000. 10,000 they can raise a question. 100,000, that question will be debated in Parliament here. So everybody here, please, if you have time and inclination, please sign up with a Stand With Crypto to force the issue. Because again, the Lord yesterday, Lord Culver, Ranger, he said when he raised, that was the first time stablecoins, the word, had been used in the House of Lords. First time. Mad. So I mean, I think there needs a push because parliamentarians, policymakers, regulatory people, they're not bad people, obviously, I'm not saying that, but they just don't understand. There's a huge education push that needs to happen. I mean, how can we help there? Ray,
Yeah, regulation's a tough one. I mean, we deal with insurance regulation all the time. We're going through a project to try and figure it out. We've had legal advice for that's just part of our daily life for transacting in any single jurisdiction. I think my big wish is that the state wouldn't force people to abide by their regulations, like have an opt-out where people could just be like, I understand the risks, this is on-chain.
it's like betting.
Yeah, and just to be able to say, I understand that this is happening and that I won't be protected by the FCA, the PRA, the whoever it is in each jurisdiction, and they can do the things that they want to do on-chain.
I think that sounds very real. I mean, like again, with betting, you can go into a betting shop and you can, I mean, I'm not advocating you do bet your house on a horse, but you can do that. And why can you do that and why can't you get involved with cryptocurrencies? Han, you're involved with lots of different jurisdictions. Is there any ones you find particularly helpful?
Look, I've got to be careful not to be shot here, but I do actually like the US. I think there's a lot of misconception about the US.
Has it changed, though? It's not, I mean...
It's not just a Trump thing. And yes, Genius Act is going to stay, by the way, even if, Newsom gets elected next. They're not going to abolish that, so that's good. But the US always had a tradition of leaving people more alone in doing stuff. There's a real culture of business building and so on. And so if there's still some pocket where you feel like you're being left alone, I've got to be careful what I'm saying here because politically it's changing, but entrepreneurially, I think it's still a very good place to be. For instance, the US has now introduced the decentralized, unincorporated, non-profit association. It's a word, mouthful, but it's the DUNA in Wyoming. That can actually take over from a Cayman Foundation as a decentralized vehicle for DAOs, at least for US teams. And speaking a little bit against my own business, because we do help people sort of getting established in all these jurisdictions, but sometimes I'm like, you're a startup team, you bootstrap, and before you can get started, you already spend a couple of $10,000 in getting your legal stack in place. It actually shouldn't be like that, but that's what you've got to do. And if you want to get your MiCA license in Europe, you spend another 50, 80K. It shouldn't be like that. We've got to preserve a sandbox for experimentation and getting it wrong. And I like what you were just saying, Ray. It's let people maybe opt out, consciously say, look, I'm okay with this. I want to go along with this. I want to try this out. I'm not saying there shouldn't be any safeguards at some point, but you've got to, from a builder point of view, you've got to make sure there's a freedom to experiment.
Katie Harris yesterday said from Coinbase, forget the sandbox, let's have a beach. Which I thought was quite a good quote. Okay, so we're coming to the end of our talk today. Risk rules, and Rails and rules, and rewards now maybe. So maybe I could ask for a minute or so each from everybody. There's a lot of volatility, there's a lot of issues, there's hacks, there's pumps and dumps, there's scares. How can we feel secure, and what is your project doing to make us feel secure? I'll start with you, Han, and then work through the group, please.
I'm processing your question, to be honest. Why don't we let somebody else go first?
Yeah.
Ray, you go first.
I mean, we literally sell security as a product, basically.
You sell the insurance.
Yeah.
Come buy his product. It's going to keep you safe.
Yeah, it's what we do every day, and there are things that can be protected against, and people can assess the risks, that they are exposed to, and some risks they just have to manage themselves, but for some risks there are a variety of products, of which we are one,
You've got to be
that
adults.
can really help out. But yeah.
Okay, adults with education perhaps. Will, what do you reckon? How can you help? I know it's institutional again, but how can you make the world feel safer in this?
Yeah, I mean, so we're very much looking at it from an institutional angle. So it's just making sure you're putting your assets with a counterparty that you trust. They have the relevant rules, licenses, infrastructure, and people. And from us, it's investing in good people and good infrastructure. Where we see the growth and change, that's moving the fastest is the US. That's where we see sort of the biggest opportunity. To Hans' point, a lot of capital assets are in that region with a big demand for crypto and stablecoin adoption. So our most recent license is the New York Bit license, which we're very excited about, which gives us the ability to offer spot there. The next step is having clear rules and regulatory guidance around derivative products. And actually, I think that's where the UK could really look to work together with the US on some harmonization and equivalence of rules and regulatory guidance. To be honest, I think that's the biggest opportunity.
Okay, Marcus, what do you think?
Yeah, I think, we as a kind of, we call it institutional DeFi, we're building a blockchain designed for banks, financial institutions, and we have, few in production now. Our goal, we're launching the public chain soon. And again, I think, we are very focused on bringing the world of finance on chain. And I think this will bring a lot of benefits for the society. If you have your tokenized stocks, bonds, whatever, and you can, use them to leverage positions, and I think will be very beneficial for corporates. And we're very focused on bringing real business on chain. We've been setting up like tokenization of credit card receivables for merchants to leverage and anticipate their cash flows. We're tokenizing trade finance receivables for commodity trading. So this is what we like to do to really transform business. And I think, the next few years will be so exciting because the world will migrate to be on chain. And, yeah.
And Had, I'll give you the last word.
Thank you for giving me some time. So,
That was a planned maneuver, wasn't it?
so look, I'm very hopeful. Look, for the first time, we have ubiquitous computing in that blockchain. It's a public good. Everybody can build on it. Let's just preserve the privacy, the safety, through market mechanism, bottom-up things that we're doing, insurance, ZK, all that stuff, to keep certain transactions private. And let's not get mollycoddled by regulators. Let's figure this out ourselves. We can build something from the bottom up, and for the first time, we have that public good to build on. And that makes me incredibly hopeful.
I have to say, I'm really enjoying this conversation. I think you're approaching business both with adultness, but also with choice and interest and consciousness and mitigating the risks for your customers. And that's obviously a good thing to hear. Buy insurance from Ray. That's the takeaway. But can I ask everybody, first of all, to follow these gentlemen and maybe do business with them in the future? They come across as very credible. I think they did a great job. And also, if you wouldn't mind giving them a nice round of applause, please, for their time. Thank you.
Happy to chat, guys.
That's it.
Thank you.